Right now, somewhere in the world, an artificial intelligence system is making a decision that could change the future of your money. And here is the scary part: most investors don't even realize they are already part of the biggest technology race in human history. Because today, AI stocks are either about to make people incredibly rich or painful poor. And in the next 15 minutes, I will explain exactly what is happening inside the AI stock market, which companies are winning, which ones are overvalued, and whether this is the beginning of a golden era or the start of the next massive tech bubble. Let's begin. Why AI stocks are dominating the market. Artificial intelligence is no longer science fiction. It is now writing emails, driving cars, detecting diseases, creating music, and replacing entire job roles. And Wall Street knows it. Over the last 2 years, billions of dollars have rushed into AI related stocks. Companies like Nvidia, Google, Microsoft, Amazon, and dozens of infrastructure firms have become the backbone of the AI revolution. But here is the first big hook. This is not just a text, this is a power shift. Whoever controls AI controls data, productivity, and future economic growth. That is why government, corporations, and investors are all racing to positions themselves early. And when too much money runs into one idea too fast, history tells us something dangerous usually follows. Nvidia, the king of the AI boom. Let's start with the company everyone is talking about, Nvidia. Nvidia does not make software. They make the brains. Their chips power almost every major AI system on earth. Every time ChatGPT answers a question, every time Google trains a new model, there is a high chance Nvidia hardware is behind it. That's why Nvidia's stock has multiplied several times in just a short period. Nvidia is now priced like perfection. That means if growth slows even slightly, if competition increases, if demand stabilizes, the stock doesn't fall slowly, it falls violently, and this is exactly what analysts are now warning about. Not because Nvidia is a bad company, but because expectations have become a dangerously high. Google, Microsoft, and the AI arm race. Now let's talk about the giants Google, Microsoft, and Amazon. These companies are not just adopting AI, they are fighting a war. Microsoft partnered with OpenAI and embedded AI into Office, Windows, Cloud, and Search. Google is rebuilding its entire search engine around AI. Amazon is using AI to control logistics, pricing, and cloud services. But here is the twist. AI is extremely expensive. Training large AI models costs hundreds of millions of dollars. Data centers consume massive electricity. Special chips are limited, so profits are not rising as fast as stock prices. And that creates a dangerous gap because markets are already pricing in perfect success, perfect execution, and endless growth. And history shows us market rarely get perfection. Is the AI sector overheating? This is where the real risk begins. When one theme becomes too popular, everyone rushes in. Retail investors, big funds, media, social networks. Suddenly, every company becomes an AI company. But here is the hook: most AI stocks will not survive long term, just like the dot-com era. Thousands of internet companies were launched, only a few became giants. Amazon survived, Google survived, most disappeared. The same will happen in AI. Some companies will dominate the next 20 years. Others will collapse when funding slows, competition rises, or technology shifts. And the danger is simple: people are buying stories, not fundamentals. And stories are the most expensive asset in financial market. What smart investors are doing now? Now here is the most important part of this video. What are professionals investors actually doing? They are not chasing hype. They are dividing the AI sector into three layers. Layer 1: infrastructure, chips, data center, cloud providers. These are the safest because every AI system needs them. Layer 2: platforms, Google, Microsoft, Amazon. These companies already dominate and can absorb losses. Layer 3: applications, startups, niche software, experimental firms. This is where big returns exist, but also the highest risk. And here is the golden rule: smart investors are not buying everything. They are waiting, they are watching earnings, they are checking real revenue growth, not just headlines. Because in the next corrections, weak AI Weak AI stocks will fall 40%, 50%, even 70%, and strong companies will become once in a decade opportunities. The biggest money is not made at the top, it is made after fear returns to the market. Let me leave you with one powerful truth. AI is real. AI will change everything. AI will create trillion-dollar companies, but not every AI stock will make you rich. Some will destroy capital, some will dilute shareholders, some will simply disappear. The future belongs to companies with real technology, real revenue, and real competitive advantages, not to hype, not to headlines, not to social media trends. And if you understand this early, you are already ahead of 90% of investors in the world. If you want to survive and grow in the age of artificial intelligence, then you must understand where real value is created and where bubbles are forming. So here is my question to you. Do you believe AI stocks are the future or the next big bubble? Write your answer in the comments. And if you want more deep analysis on global markets, technology stocks and future trends, subscribe to this channel. Like this video so more investors can see it, and share it with one person who is thinking about investing in AI, because the AI revolution has already begun. The, the only question is, will you profit from it or will you arrive too late?